Hello everyone, welcome to this week's weekly market view for Monday the 28th of November to Friday the 2nd of December 2022. My name is Vishal, let's get started. Alright, so let's start with the Nifty chart and let's start with the monthly time frame. As you can clearly see that markets are coming closer to making all-time highs. The high printed today on the charts was 18,611. The all-time high on the Nifty is 18,604, right? So we are indeed made a new all-time high on the Nifty today. And now the most important part, like I've always been saying, is that we want to see whether the prices are going to be closing above the all-time highs. Now we are just days away from the monthly candle close, and which means that the monthly candle close will be a very interesting candle. At the same time, a close above the prior highs will indicate that the markets are bullish and might continue its move to the upside. Let's move on to the weekly chart. On the weekly chart, now we have broken this major weekly demand zone. So this weekly supply zone has been taken out, and the high on the chart was 611. The high that this candle has printed is 604. Yes, so this is a new high on the Nifty. Bank Nifty has already printed new highs, so more or less it was going to be very likely that eventually Nifty will also follow. However, right now the 18,600 level is acting as a stiff resistance for the market, and that's why the close above this candle is going to be very relevant. If we do get a close above the 18,600 highs, then this is going to be a very crucial level of demand to watch out for on the weekly chart, which is around 17,836 to 17,653, with absolutely no supply zones in on the Nifty market. Let's go to the daily chart. On the daily chart, we are now at the very threshold of the supply zone, but now today this supply zone has also violated. Let's look at the high on this supply. The high on this supply is 18,604. So the high on this candle is 18,604, and today Nifty has made a high of 18,611. So yes, we have made an all-time highs, and now it's been seen across all the time frames, right? So this is the daily chart, and market is hovering around that all-time high right now. And generally what happens is whenever the market creates a all-time high, it just creates a very positive euphoria in the market, and then everybody wants to start going and buying there. However, the suggestion is that whenever markets make an all-time high, they have a tendency to pull back, and that is a sign of a healthy market. So whenever you see markets moving up, they will correct before they move up. So right now, if the markets continue to move up, maybe it's not the right time to enter long. But a pullback will indicate that we should be entering long trades going forward. All right, but let's see how this shapes up for the coming days or for the coming weeks. Right now, because the market is making all-time highs, the one thing that we should refrain from shorting this market. All right, let's check our volatility analysis and let's see, has there been any difference in the premiums. So today we had a little bit of a downtick on the Nifty in the morning, and that was also because of Reliance. And then after, the market has pretty much steadied, printed a low of nearly 18,365, and now you can see that, let me just refresh the graph. So here you can see that the market is trading at the lows over here, and if you look at this overall volatility, there you can see that there has been a clear spike in the volatility, which indicates that the options premiums are or have become expensive, from being very cheap to being a little expensive right now. So if you are an options buyer and if you initiated any options positions, you would be sitting on good profits if you are directionally long, or even if you have initiated any debit non-directional strategies, that would also indicate that your trades would be making some profits if you did initiate or take some trades here. All right. So now what could happen? Now that the volatility has moved to the mean, there is also a tendency of volatility falling down and coming back to the zone 2 or zone 3, right? So this in itself is probably telling us that we just need to be a little careful, because in case for some reason there is some news or there's some profit booking coming in, the markets start to fall down, then there's a possibility that this volatility will keep on increasing. It may not increase in one shot, but there's a possibility that it might just dip down first and then increase slowly. And as I said, that when IV is in zone 1, it has the tendency to at least go towards the mean before it again comes down. All right. So this is a good time where options traders who have initiated debit positions would be making some decent profits based on the rise in the volatility today. Let's look at the Bank Nifty now. And if you look at the Bank Nifty, let's open the Bank Nifty chart. For all these days, the Bank Nifty was the leader, right? I mean, it made all-time highs even before the Nifty made. But in the past 1 or 2 days, it has been a little lagging as compared to the Nifty. So even in fact today, the Bank Nifty is not as strong as the Nifty, although it has printed new highs, right? So this candle is most likely to close like the way it's closing now, right? So this new demand zone is going to be a very, very critical one, okay, which is 39,542 to 37,071. On the weekly charts, you have this gap level, and this is that weekly demand zone. But we also have this gap level demand, and in case if the markets do pull back, we might see a little bit of a move to the upside if that happens. On the daily chart, price has remained in a consolidation phase before the market gapped up. Today also the market came down, reacted to this area. So we need to see in the days to come where do we actually see the real demand supply equation. There is definitely no supply on this market, so there is only demand, and we have these gap levels over here that we need to account for. So there is one level of demand over here from 42,189 to 42,523, and we have another level of demand sitting right below this gap here, okay, but that's much lower. Okay, it's more likely that the prices might retrace to this 42,523 level before the markets decides to go down. All right, so we'll just take it in our stride and take it a little slowly and steadily. Now if you look at the options volatility, the volatility has risen from zone 1 to zone 2, but not as compared to the Nifty. So the Nifty picture is slightly more different on the volatility analysis time frame, but on the Bank Nifty chart, it is not showing a great rise, although premiums have risen. So there is a possibility that we might see an increase at least till this zone as per the volatility methodology. And if that happens, again, as I said, that those who have been in debit strategies and options would be making money if they are obviously directionally right. And even if you have not planned any directional trades, if you have planned any non-directional trades on Bank Nifty, you would still be making money because of the rise in volatility. So this is a very, very advantageous situation to be in, generally for people who are doing debit strategies and options, whether it's directional or whether it's non-directional. All right, let's move on to the USDINR chart, and let us see what the USDINR chart is telling us. So let's move on to the USDINR chart and let's see how things are shaping up on the USDINR. So if you look at the USDINR monthly chart, we have a clear level of demand located around this area over here, which is 80.10 to 78.53. So there is a possibility that if the price comes to this level of demand, you might expect to see a bounce. And if you look at the weekly area of demand, in fact now we have a level of demand on the weekly over here, and we also have an interim supply on the weekly chart over here. So it's very likely that the USD-INR might tend to consolidate between this supply and this demand before it either breaks the supply and moves up, or it breaks demand and moves down. If the USD-INR remains to be consolidated, or if it just decides to remain in a consolidation, depending on which direction it moves to. If it moves to the upside, then we would expect Nifty to move down. And if the USD-INR continues to move down, then we might see a uptick in the Nifty, which means that the all-time highs will continue to be printing on the Nifty index. So this is a very, very important point that I'm making here for you to understand if you are trying to correlate the Nifty and the USD-INR. Let's look at the daily chart. So on the daily chart, we are seeing a lot of consolidation has taken place. In fact, this supply zone on the daily is still holding very, very nicely. It could come down, and any event of it coming down could bring an uptick in the Nifty. And then you also have this level of demand sitting right here, which is far away. So if that happens, then and if this supply zone holds, then we might see a more of a downtick on the USD-INR than an uptick. If you look at the volatility analysis, the premiums on the USD-INR are expensive. So this means that a credit strategy, whether it's directional or non-directional, depending on what your risk plan is, would be something ideal that you would like to plan on the USD-INR, as opposed to the Nifty and Bank Nifty, where the premiums are much, much lower. Alright, just to talk a little bit about the stocks specific. So we do conduct some important sessions in our premium level education. And in today's session, we had identified an opportunity. One was on ACC. So I'd just like to quickly show you on how that opportunity actually played out. So this opportunity was planned on a 5-minute chart. And what we call this setup is more like an intraday setup. So price kept on moving up with a strong momentum. Then the price did break down during the live session. Price then had a pullback into the level where price hit the level and gave us the entry, and then it retraced back down and gave us the target. So this was one of the trade setups that was planned in today's live session. And the other trade setup that was also planned in today's live session was HDFC AMC. So I'll just like to quickly show you that as well. So again, very, very similar to the ACC setup. We identified a supply zone here. Price made a low, then went back, retrace, gave us the entry point over here, gave us a second opportunity to enter over here, and then came back and nearly hit our 1:1 odd target. So these were some of the trade setups, after which the price then again went into the supply zone and it is just hovering over there, right? So this is how we use the plain simple philosophy of demand and supply to identify trading opportunities. If you do like our analysis and our analysis going forward, please hit the like button, and do not forget to subscribe to our channel, which is Sharekhan Education, and do give your likes and comments to improve or to see some different things coming up in the weekly view sessions. Have a lovely week, everybody. Trade safe, and looking forward for the next week analysis. Take care. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.